Let's get a move on. Raymond is surely a newsmaker in trade today. Remember, they're demerging their real estate business in order to unlock value for shareholders, to harness growth potential for the Indian property market. They'll also be listing the real estate entity separately. Ajay caught up with the CFO, Amit Agarwal, on the way forward. Let's listen in.
Well, Raymond is in focus. There's a lot of value creation happening there. You just saw the announcement of real estate business being carved out. You've already been hearing about what the management is aiming to do by this reorganization now. And we've already seen very good returns coming in the last 2-3 months in the stock going into this announcement. But today we are joined by Amit Agarwal, the Group CFO of Raymond, to talk about how the business segments are doing and the overall thought process of the management to undertake this exercise and what are we trying to achieve by this. Amit, thank you very much for your time. We are having this discussion at a time your stock price of the company is at $3,000. I remember when you had just come over and we were having these early discussions about the focus area. Since then till now, I would congratulate that both you and your team and the leadership have, laser focus of maximizing shareholder returns has been pretty visible despite a lot of ups and downs. Now that we are talking about this reorganization actually happening, talk to us about the thought process and what we are trying to achieve by this reorganization and this demerger.
Sure. Thank you, Ajay, for having me on the show. I think we are very happy that the board have announced a decision to demerge our real estate business to give the investor community a pure play net debt free businesses and with a very solid background backing for each of the businesses to grow further. Now, if you look at it, last year we announced the demerger of the lifestyle business, which clearly has a great story with expansion going on in the garmenting business, store expansion, which we did 200 stores last year, 500 stores going to open. I think that is going to be a very large business. Secondly, if I look at the real estate business, why we are doing the demerger right now, the answer is very simple. Any demerger takes anything between 15-18 months. However, what we have achieved in the last year, fiscal 24, we achieved almost 1,600 crores of revenues as well as 2,400 crores of bookings. And now we have signed 4 JDAs, of which 1 JDA we have already started the work in Bandra, and we have seen an overwhelming response from the customers and the construction with which pace we are doing. So I think if I look at it, the projects, 4 million square feet, which we are currently running at Thane, 2 million of the JDA projects, and another 7.5 million at potential at Thane, all put together, we are talking somewhere in the range of 32 to 35,000 crore of projects, which we have under execution over the next 7-8 years, which clearly demonstrates that the real estate business is, again, as said, in the next 3 to 4 years could easily achieve a 4,000 crore revenue run rate with a 25% EBITDA margin. And it's one of the unique real estate company that it is sitting on cash. So as on 31st of March, we are sitting more than 500-600 crore of cash. So net debt basis, it gives us a very good position in order to grow this business at a faster pace. And we believe the JDA opportunity in Mumbai is phenomenal because there are old buildings which require to be developed, given a proper space, and with the FSI norms, I think it is a win-win for everyone, for the builder, for the developer, as well as for the tenants who are going to live, who have been living there, plus the new buyers. So I think all around it is a very big win-win situation. And we are actively getting it because 2 or 3 strengths which drives our real estate business is clearly our demonstrated capability of delivering the projects well before the RERA timeline. As you know, the project which we delivered in Thane 2 years ahead of RERA schedule. Second thing, we are not just giving you an apartment, we are giving you a lifestyle. And I think that is very important to understand that how a lifestyle can be enjoyed by the people, because in Mumbai, ability to afford a very large apartment does not exist for everyone. So therefore, what is important is that the lifestyle is available. For example, in the Thane project, for a 370 square feet apartment, the person gets 50,000 square feet of a clubhouse, 5 acres of a garden. So everything you get with a very small apartment. So that is the second thing. Third thing, what we do not believe is that we charge a very high price. We remain in the market price relevant so that for us as a business, we do a faster. And for the return to the shareholders, what is also important is that whatever project we take, we ensure that anything in excess of 20% IRR is given. So far, whatever we have taken delivers me 25% plus IRR. But I'm saying internally as a benchmark, we have considered that on a conservative basis, you should deliver 20% plus IRR.
Right. Amit, right. Amit, let me come here. Let me come in over here. With this answer of yours, I'm reminded of words of Mr. Gautam Singhania. I was talking to him a few years back, and he said, Ajay, we will try to differentiate our real estate business by getting a very manufacturing mindset, a very time-bound, very financially efficient mindset in there. When people actually, question that, will you guys be, very successful in real estate, and what is the idea behind it? Now we are seeing all of that happening ahead of time, financially prudent, and putting your own name, the brand name, on your offerings, and not only on your legacy land bank, but JD model. Talk to us about the differentiation which Raymond will bring to grow this business. Your early start has been very well received because it's a very competitive marketplace, Mumbai, right?
Yeah, but you see, as you rightly said, that Mr. Singhania has been very clear. He's steadfast on this principle that we are not just giving you an apartment, we are giving you a differentiated lifestyle. And I think the focus here is very simple, that if I take the JDA project, which we have just started in Bandra, we launched 177 apartments, 3 buildings day one, and within 30 days, we sold more than 100 apartments. And I think that speaks volume for itself that there is a conviction. To give you a small perspective, that the people on the day one when we launched, we called more than 200 and almost 250 people to attend. But it was such an overwhelming that there came 350 people. So it was a tough for us to accommodate people. So I think what is happening is the sales part, because you're selling at the right price and people are convinced that Raymond, which stands for trust, will give an apartment which will be a unique. Second thing, I think also on the execution phase, as you rightly pointed out, manufacturing mindset. I think when we took this land or JDA model over 1.5 years, we never said we will announce today or tomorrow to start the project. We said our groundwork should be completed, then only we announce the project. And because we did a very good quality of a groundwork, we were able to move the tenants who were existing, living there, more than 550 in less than 4 months. We were able to vacate the premise, all sorts of things in less than 2.5 months. So to that extent, our execution capability, we organize ourselves well in advance, plan it well, so that once you start the process of building, executing the project, you don't have a start and a stop. And now that is what it is running. So I think very clearly on Thane, we have been successful. And as we have seen in the last 4.5 months in Bandra, which we launched in mid of Feb, I think we have been able to execute as per the plan or slightly better than the plan. So I think
Amit, before we let you go, I want to talk about, you've spoken about potential revenues in the next 3 to 4 years, both from combination of your own land and JD model, the kind of response. If you can broadly put an aspirational number or potential of real estate business in revenues in the next 3 to 4 years for our viewers.
Sure, no, absolutely. I think you look at it, I'll give you a little color on what is the development numbers. So 4 million square feet we are developing right now as we speak in Thane, which is on a 40 acre. We have a total land of 100 acres. So total potential is close to 11 million, of which 11 million, 4 million we are constructing right now. And if I take the JDS, which we have signed, that is another 2 million, which is worth 7,000 crores. So overall, as a potential, we are talking somewhere in the range of 32 to 35,000 crores, which can easily be developed over a 7-8 year period. However, it is not that if you see in the last 6 months, we have signed 3 more JDAs. I think that ability for us to get more JDA projects is very, very clearly visible. And we are on the close contact with the various people, and I think few more JDAs would get signed. And any JDA you sign, it will take 12 to 15 months to start. So I think in the next 3 to 4 years, what we are talking is easily a 4,000 crore revenue model with a 25% of EBITDA and a 25% IRR. So I think that is a very clear thought process with which we are working. As far as the challenge of the business is concerned, there are so many projects available to us that we are not seeing any dearth. As far as liquidity, which becomes another big question mark, I think we are uniquely positioned that we have a significant amount of cash available for us to execute the project. And because of the philosophy that we work with, that sell fast, build fast, and collect fast, that enables a very small amount of working capital which is required in order to grow the business at a phenomenal pace. Very clearly, last year we did a pre-sales of 2,400 crores. So actually, if you see 1,600 crore revenue, 2,300 crores of pre-sales. So that shows us clearly that there is a visible mark that we can achieve comfortably a 4,000 odd crore revenue in the next 3 to 4 years.